Good afternoon. I would like to call the meeting of the Audit Committee to order. Michelle, are there any public speakers?
Yes, Madam Chair, we have one public speaker today. As a reminder, we ask that our public speaker adhere to the MTA's rules of conduct and decorum. I would also like to remind our public speaker that in the interest of time and fairness to all speakers, we limit everyone to 2 minutes. Please be aware that there will be a warning beep to remind you that you have 30 seconds to conclude your remarks. Our speaker is Omar Vera.
Thank you. All right, it's not much I have to discuss today. Just the only thing I'm going to discuss is I'm hoping to see the Omni Fare card be released for 30-day unlimited. That's what I'm waiting for. Other than that, everything's good. Thanks.
Okay, thank you to our public speaker for your comment today. Next, we have the approval of the January 29th Audit Committee minutes. Any corrections or changes to the minutes? May I have a motion to, thank you, a second?
Second.
Vote? Thank you. The minutes are approved. Michelle, are there any changes to the work plan?
Yes, Madam Chair, there's one change to the work plan. The information technology report that was scheduled for January is going to be moved to the October Audit Committee meeting.
Thank you. Now we have Jim McGovern, the MTA Deputy Chief from the Controller's Office, who will brief the committee on management's review of the 2023 MTA consolidated financial statements. This review includes changes in capital, net assets, other assets, and operating revenues and expenses. Jim?
Good afternoon, everybody. The report, the slides I'm about to show you here are not the presentation as in conformance with generally accepted accounting principles. Just want to be clear, they're a much more summarized version. The reports that are in your book are prepared in accordance with generally accepted accounting principles. They are complete and still subject to any material audit adjustments, which will be communicated to you, if any, in the future. And as I said, the slides I'm about to go through with you are on a summarized format. The MTA component unit, or subsidiaries, are comprised of the 10 agencies you see listed below. One thing I just want to be clear on, of those 10 agencies, 8 have all individual audit reports issued. And I think what I want to stress for the committee is that each one of the agencies has different level of what we refer to as, in accounting world, materiality, right? And so it just adds a little level of complexity. If one agency has something that's less material than others, it affects the whole consolidated reporting. 8 of the 10 have individual audit reports. The only thing to highlight this year on that is on number 10, Grand Central Madison Operating Company went live this year. That's no surprise there. That's the highlight of that slide. The consolidated statements have not changed. Basically, they're divided into 6 components. The MD&A, the basic financial statements, which are your balance sheet, net position, your income statement, cash flows. The fiduciary position in those 2 arrows down there represent the benefit plans that MTA has fiduciary responsibility of. And then there are the notes to the financial statements, required supplemental information. What's in that section is primarily pension related, more detail on pensions and the OPEB plan. The supplemental information on the fiduciary plans is more detail on the defined benefit plans that MTA administers. Nothing real exciting in there. So here's the highlight of the year. We implemented or reviewed GASB 94 and GASB 95, public and private partnerships and availability payment arrangements, and omnibus which omnibus, as it refers to, is basically corrections of, or clarifications of previously issued GASBs. We implemented those two in 2003. There were no effects on our financial statements upon implementation of those. The highlight of the year is GASB 96, subscription-based information technology arrangements. I won't go through and define it, what it says there, but basically what the accounting literature requires us to do is capitalize and create a liability for software that we have access to use. What's a good example of that? Timekeeping. I can go and use my timekeeping application 24/7, 7 days a week. I can go in and use my email application 24/7, 7 days a week. The accounting literature requires us now to treat that as an intangible asset and a subsequent liability. So how's that intangible asset calculated? It's basically calculated by taking the net present value of the payments in the future. That is your asset, and your offsetting liability. Usually in these subscription-based arrangements, the length of term is not that long. It's usually five years, I'll say, because of software. I'll get more into this implementation in a second on my next slide. And then next year, we have 3 GASBs to implement: accounting changes and error corrections, compensated balances, and certain risk disclosures. I don't foresee those being overly demanding right now. So let me show you, this is the impact. Again, when we implemented 96, we had to go back and restate 2022. So we went through and we had to recalculate basically payments that we made in 22 for IT arrangements, back those out, and recreate an asset for 22 and for 23. The middle column shows the impact at the end of 22 for our restated financial statements for 22. Basically, assets of 133 million, liabilities of 81 million, and operating expenses of 52 million at the end of 22. What I really want to do, because I don't want you to leave here thinking that those are just numbers on a page. There was a lot of effort that went into that $133 million, okay? If Raf was here, I'd give him some credit because we have an appreciation for the extent of his organization, better than we did. But it's not so much what's on that page, it's what's not on that page that we had to evaluate, to exclude items and review items that weren't eligible for this accounting treatment. We reviewed 572 contracts. We reviewed 3,300 purchase orders, right, to make this determination. There was a whole, to give the accounting group credit up on the 15th floor and outside, it was clearly a team effort. I will give thanks at the end of this little speech to 3 people in particular. So, and as we did that, not knowing so much technical jargon, we learned, and we had to work with Raf's team, because sometimes subscriptions and maintenance are the same things, but they're just labeled differently. So we had to go through with the IT folks and actually painstakingly, go through the contracts. And the contracts are, there's a lot to these contracts. So kudos to the accounting folks. And I'll say thank you to my colleagues here at Deloitte, who we had to kind of bounce things by in terms of interpretation. And also special thanks to 3 people, Lisa Tan, Serge Friedman, and Vikram Karecho, who pretty much were the drivers of this. So kudos to them. I just want to make sure we give them credit. So this was, I'll call it the highlight of the year for accounting, if you really want to call it the highlight. At the end of 23 and 22, again, this is summarized, I'm not going to go into too much detail here, but you'll see assets of 116 billion at the end of the year versus 22, and corresponding liabilities and net position of 116 versus 117 in prior year. And I'll kind of go through some of the major changes to that. I would say the biggest delta we had is on the cash and investment side, primarily due to the repayment of principal and interest on MTA payroll mobility bands. And also we transferred 1.3 billion into the MTA OPEB plan. The MTA OPEB plan trust, similar to when we make contributions to the pension trusts, it comes off our balance sheet and is separate, is maintained separately. Those are all part of that fiduciary reports I was referring to earlier. Capital assets increased about $3 billion. There was a lot of in and outs of that, but the highlight really was Grand Central Madison was placed in service. We had a net depreciation of about $102 million on that. And again, that's a long-term asset, so that's why it's, only $102 million this year. The deferred outflows increased, and then that primarily refers to that transfer into the OPEB trust, the $1.3 billion, and pension plan actuarial adjustments for differences between actual earnings on the pension plan and projected actuarial pension adjustments. The plan, just to be clear, the plans there's a year lag, okay, between the measurement date of the plans and the accounting date, right? So if the stock market goes up right now, we probably won't reflect that until next year. So that's highlights and liabilities. Really, I'll go to the second, the first bullet we just spoke about was paying back of the bands. The OPEB liability decreased. Again, that's primarily, it's not due to the transfer because there's a year lag in that, but it's primarily due to change in actuarial assumptions. I'm going to simplify this because it's kind of very complex, but as the discount rates went up, that causes a decrease in our OPEB liability in the future. Correspondingly, you'll see in the fourth bullet, the deferred inflows increased as a result of the change in those actuarial assumptions as well.
Jim, just really quick, when you say the bands that were paid down, that was the Federal Reserve MLF borrowing. Remember, you paid that $2.9 billion of COVID lending off rather than, be stuck with. The alternative we would have spent on operating expenses and then be left with 30 years of debt service. But since we got the funding package out of the governor's office, we were able to avoid spending down that borrowing, and we're able to pay off the debt.
Okay. The only other item from this slide is a third bullet, whereas the pension liability increased, and I referred to it earlier as basically the change in the actual loss on the market value of plan assets. What the accounting literature does now, and recently, last couple of years, is we're much more volatile because of the market conditions. In the past, we weren't. This slide, it's kind of doesn't tell you too much more than you probably already knew. Is the assets and deferred outflows of resources split up by agency. Obviously, transit being the largest component unit of the firm. And then the only delta, if you look at the liabilities and deferred inflows, is really the bonds and the debt that's maintained by TBTA and MTA, which is causing the difference between the assets and the liabilities on the pie chart. This is, kind of just a flow through from prior years as well. The capital assets just tells you the split between components, infrastructure obviously being a significant portion of our assets, which, increased from prior year primarily because of the Grand Central Madison going live. And then the liabilities we referred to earlier is primarily the debt, and the OPEB and pension plan liabilities is a significant portion of that. Nothing really to highlight here so much except for on the income statement in 22 versus 23, the subsidies and tax revenues. That change is due to ARPA money we received as federal grant money in 22. Other than that, there's nothing really, nothing to really highlight here. The cash flows, pretty much just an extension of what's happened during the year, but primarily the timing of investments and moving of monies between from 22 to 23. Just want to list our financial statement footnotes. There's 18 of them. There used to be a lot less, but that I would say the significant ones we spend a lot of time on are the employee benefit plans and the other numbers 4 and number 5. They're probably, if you looked at the number of pages in the footnotes, that's probably 50% of our disclosures, which probably makes sense. That's my story, and I'm sticking with it today.
Thank you, Jim. Do you have any questions? No? Okay, in that case, we will have Jill Strohmeyer. Hi, Jill. And representatives of her team from Deloitte, the MTA's public accounting firm, to present the results of their review of the 2023 MTA consolidated year-end financial statements. The financial statements will be issued in final form after the Audit Committee review and approval. Jill Strohmeyer, Managing Director, will give the presentation. Jill?
Thank you. Good afternoon. So Deloitte is in the process of completing our audits for 2023 of the MTA and all 7 of its agencies. Just a reminder, we audit these financial statements in accordance with 2 sets of standards, both the standards established by the AICPA and government auditing standards. And we hope to issue our reports final next week. The significant accounting policies for the MTA and its agencies are set forth in Note 2 to each of the financial statements. As Jim mentioned in his presentation, we are aware of some changes related to the adoption of GASB 94, GASB 96, and GASB 99. Other than those 3 changes, we're not aware of any other significant changes to accounting policies or their application during 2023. Throughout the financial statements, there are a number of significant accounting estimates. They're integral part of the financial statements prepared by management based on management's judgments. Some of those key estimates include OPEB, pension, claims, and incurred borrowing rate related to GASB 87 leases and GASB 96. There were no uncorrected misstatements or disclosure items passed related to FEMTAC, Long Island Railroad, Metro North, MTA Bus Company, New York City Transit, CERTOA, and TBTA. As it relates to the MTA consolidation, we did identify 2 expenses. They related to IT expense and other professional service expenses. There were 2 items that were identified as being 2022 related that were recorded in 2023. The total of those 2 items was $632,394, so rather small. However, because we identified those 2 items through a statistical sampling, we had to extrapolate those 2 items over the entire universe that we tested. That extrapolated amount was $58,495,000. It's an estimate. The only way to pinpoint that number more precisely would be for management to perform more work related to expenses. It is not material to the financial statements. As it relates to materially corrected items, there was one material corrected item related to TBTA. During our audit, we identified a disclosure item related to debt. So TBTA financial statements had originally recorded $766 million of debt as non-current, and it should have been classified as current. The TBTA management team did in fact make that correction, and that correction is reflected within the financial statements herein. During the course of our audit, we did not have any disagreements with management. We had the full cooperation of management and executive management throughout the course of our audit. We have evaluated the MTA's identification and accounting for and disclosure of relationships and transactions with related parties. And based on our evaluation, we believe that the MTA has properly identified, accounted, and disclosed all related party transactions within their financial statements. So we will be in a position to issue our opinions final, hopefully next week. I do have to call attention to emphasis of matter paragraphs that are included in the reports for each of the agencies. These emphasis of matter paragraphs detail items related to the fact that the MTA requires significant subsidies and has material transactions with other governmental entities, such as the City of New York, State of New York, and State of Connecticut. In addition, we'll have emphasis of matter paragraph related to the adoption of the new accounting standards. These emphasis of matter paragraphs are not modifications. You will still have clean opinions. It's just then in our judgment as auditors, we believe it's important for readers of your financial statements to understand that there was adoption of accounting standards and the transactions that are happening with other governmental entities. Very similar to prior years. The only change is last year we highlighted the adoption of 87 for leases. This year we'll be highlighting the adoption of the subscription-based IT arrangement adoption. In your packet in front of you is all of the information I'm going over today. Attached at the back are representation letters, management representation letters for each of the 8 audits that are being conducted. Under the auditing standards, I'm required to share with you draft of those management rep letters, so they're there for your review. If there's any questions post this meeting, I'm happy to field them. And finally, in connection with our single audit, we plan to issue a report to you also dated next week related to MTA's internal control over financial reporting and compliance with laws, regulation, contracts, and grant agreements. This will be part of the single audit presentation that I will perform in July. In addition, in July, if there are any deficiencies, internal control deficiencies, as a result of our audit procedures, we will share those deficiencies with you again at the July meeting. Finally, I just want to thank the entire MTA team, Kevin, Jay, Jim, and his entire staff and team for all their cooperation throughout the year. It's great to work with your team and the responsiveness throughout the course of the audit. In addition to Michelle Woods and her team, tracking down audit evidence and calling people when needed. So big thank you to you and your team as well. And we wouldn't be here today without the team next to me. This is the Deloitte team. This is the leadership team. These folks put in a lot of time auditing the largest transportation authority in this country. And so thank you to Costas, Patricia, Darshan, Mike, and Anush for all their hard work and leadership on the Deloitte team. So thank you to everyone. And if there are any questions related to the results of our audit, happy to answer them.
Okay, go ahead.
Sorry. Do you issue a management letter as well?
Yes, that we will issue a management letter in July.
In July?
Yes.
Okay. And do you reflect past management letters and the compliance that have occurred since those earlier?
Yeah, so any management letter comments that we had in a prior year, if they're not addressed during the current year, you will see them again in the July meeting. If they have been corrected by management to our satisfaction, it will also be noted in our report that they've been corrected. You're welcome.
Lisa, you have anything? Thank you, Jill and team. May I have a motion to accept the 2023 year-end financial statements and a recommendation to move them to the full board for their final approval on Wednesday?
Second.
Second, okay. The MTA 2023 year-end financial statements are accepted by the Audit Committee and will be recommended to the full board for their approval on Wednesday. Continuing with Deloitte, we have their review of MTA's compliance with the guidelines governing investment practices. Jill, please.
Thank you. So on page 674 of 678 of your package or your documents, there's a one-page report from Deloitte. This is essentially a negative assurance report that's needed for your filing up to the state of New York. Essentially what this says is that during the performance of our audit work related to investments, nothing has come to our attention that would indicate that the MTA is violating any investment guidelines as dictated by the state of New York. So it's a clean report in that respect. Nothing noted.
Okay, thank you, Jill. Any other questions? You're good? Okay, may I have a motion to accept the investment compliance report and move it to the board for final approval on Wednesday?
So moved.
Second, approved, approval. The investment compliance report is accepted and will be recommended for approval by the full board. Moving on, we have Lamont Kearse, the Chief Compliance Officer. Lamont is here with the agency internal control officers to provide a quarterly report on the status of open and past due audit recommendations previously accepted by the agencies. Lamont?
Thank you. Good afternoon. As you know, at the request of this committee, MTA Corporate Compliance continues to monitor the implementation of remediation plans by the MTA and its agencies. So I have a very, very brief report here. So we are currently monitoring over 300 remediation plans. As you can see from this slide, there is a constant flow of plans being opened and closed. During the first quarter of 2024, there were 77 new remediation plans opened and 109 that were closed. So far, on the second quarter of 2024, we're sitting at 23 being opened and 33 being closed, and hopefully they'll keep at that rate and close more than get open going forward. Of the number of plans that are currently open, that over 300, there are currently 73 that management has indicated that they have implemented but have not been verified by either compliance or audit services that in fact they have been implemented. So there's a process involved. So when the remediation plan is created, it's given to the business to implement. They say they implemented, they submit it to compliance. We verify that in fact there is sufficient documentation to support their assumption or their statement that it's been closed. Once we're comfortable with it, we then send it to audit services. Audit services then takes another look at it to confirm that they agree with compliance in the business. If we're all in agreement, it gets closed. If not, audit services sends it back to us, and we have to keep working on it until we can make audit services happy.
Lamont, could you give me an example? I'm ignorant of how this works, but give me an example of what this would look like. What kind of compliance issue?
So
Just an example.
So it's very broad. I mean, it's every area that's being audited. So it's financial, it's operational. So there are pending remediation plans regarding compliance with maintenance schedules at some of the agencies. There are remediation plans on certain adjustments and accounting issues that needed to be made. There are open remediation plans on so many different things. I can't even begin to tell you all of them, but they are both operational and financial. There are several around IT and making changes to different IT systems, so it could be a variety of these things. Some of them are very significant, and those are the ones I'm going to talk about next. Some of them are not so significant, so we do break it down by how important they are from a perspective of, obviously, anything around safety, cybersecurity. That's going to be a very, very high level. Something about a minor accounting adjustment, no disrespect to all the accountants, I'm sorry, in the room, may not raise to that level. So it's a variety. So it's a lot of the work that Michelle does, and she probably talk a little bit more about some of the more detail if you want.
Just to give you an example of what
Yeah.
could get stuck here, we could have a recommendation about a policy, and then they would have to create the policy, they would upload that policy, and compliance might say, yes, you've created this policy, and then it would come to our office, Darren or Phyllis would review it, and they'd find, well, yes, you created the policy, but you left out off this one step, which is something that the finding was related to, and so we'd kick it back until they would correct it, and that's how it could end up kind of stuck here. But this was an actual recommendation when Essentia came in and did their review to help us make sure that we get corrective action and the corrective action sticks. And so that's why it's valuable to do this.
So compliance is kind of like the UN. We're between audit and the business, so we're trying to make everybody happy. Okay. And so the final slide, the remediation plan, 6 months past due. There are some, as you can see from this slide, I always focus on the ones that are high priority, which is at the end. And there are, at this point, only 14. I know there are 15 on the slide, but prior to today, one additional one was closed out. So there are 14 in total out of, again, that universe of over 300. So, all right, and that is my presentation. If you have any questions, I'll be happy to answer them.
Thank you, Lamond. I'm sure you had all your questions answered. Yes, good. Okay. We have one final topic for discussion. May I have a motion to convene an executive session to discuss proposed, pending, or current litigation in accordance with New York State Public Officers Law 105.1D?
So moved.
Second. Okay, all in favor? Aye. We will now move to executive session.
Yes, sir. Good to see you. Yeah, no problem.
And the committee discussed items related to proposed, pending, or current litigation. This executive session was for informational purposes only, and no action is required by the committee. I would like to take this opportunity to thank Michelle for her work with MTA Audit Services over the past 32 years, as she will be retiring next week. And I have to say, I'm going to miss Michelle. She's been the consummate professional. So great to work with you, Michelle, and I wish you the best of luck. Yes, all the work that we talk about, a lot of it fell under Michelle's leadership, so thank you again. Monica Murray, the New York City Transit Chief Administrative Officer, will be joining us as the new Auditor General, and we look forward to working with Monica on future Audit Committee business. Hey, Monica. Now the long-awaited, may I have a motion to adjourn the Audit Committee meeting? Second, all in favor? Aye. Meeting is adjourned. Thank you.